Well, welcome on in, guys. You know that I like to hop to it. I like to get in, get to the charts, not waste any time, and knock it out, right? But today's a little bit special. We have news. So if you don't know already, guys, I have a link in the description box below. I had an interview with Tom Bodrovics at Palisades Gold, and needless to say, it was an extraordinary honor to have been with Tom. And I thank you for that opportunity to join you. It was awesome getting to know you offline, so I really appreciate that too. And suffices to say that it's a big deal for me, and I really appreciate it. And thank you for that. And those of you who already follow me, if you're not already subscribed to Palisades, when you go watch the interview, return the favor, subscribe to Palisades. It's one of my favorite resources anyway, right? It's one of the ones I ring the bell for. I get all the alerts. I mean, you're talking about titans of the industry. You're talking about some of the best macro minds going for some of the best interviews you'll see. Really helps you stay up to date with what's going on out there, because look, that's what it is. When you're watching these interviews, it doesn't matter who it is. I mean, you're mining through all this data, right? You're just going through all this new information, and every now and then it's like click, and you catch a gold nugget, right? You mine a gold nugget, and this nugget could be some new perspective or something brand new and novel you didn't know. And it's a takeaway, right? It's something you can take and store away for yourself. And you do that enough, and these little nuggets become gold bars, right? And then you end up with a wealth of nuggets, right? All these takeaways and perspectives. And so it adds up, and it's a great resource for mining that gold, right? So go over there, return the favor, and give him a sub if you're not already. And thanks again, Tom, for that. Beyond that, guys, you see we have a new format today. We're going to try it out. Let me know if you like it. If you don't, we'll go back to the other way, okay? But I'm just always trying to find ways to improve. So let me know down, let me know down in the comments below what you think, what you thought about the interview. I'd like to hear y'all's feedback from that. And I've got something special for you tomorrow too. All right, so we're going to have another interview right here on the Liberty Offensive. It's a special guest. I'm going to keep it a secret. You're going to like it though. This guy's a rock star. He's a class act. And he's just top shelf. Okay. And so he's going to bring us some good insights and expand our knowledge so we can all level up together. Okay. So we're going to go mine for some gold tomorrow too. It will be gold and silver related. So you're going to like it. So stay tuned for that. I'll see you then. And also I'm going to try tomorrow. Look, we're going to cover the market action today, but it's because I'm seeing everything going on with the markets that I want to put out an update, but I'll put out a more comprehensive update tomorrow after we get the weekly candle close. It'll be a bit more meaningful. But today I wanted to get something out there for you guys so you have something to chew on. So hang tight. In the dollar, we're looking at the DXY on the weekly, okay? Now you can see a clear divergence. I think that this is getting a little top heavy, and I think it's looking like it wants to roll over. You can see the same thing kind of forming on the US 2-year. These things are getting pretty high, and you got to wonder how high it can go before the Fed gets priced out of funding the federal government. Okay, things are getting real shaky here, and you got to appreciate that things are likely starting to break. We've had a big day in the metals. Okay, so if we come into the daily chart, all right, we can see that we had a little bit of downside here. Again, that's not unexpected. You had some short-term divergences here. I still think it's possible to hit $16 on silver. I will go on record and say that I am awful at silver, but that's what the charts would indicate. Now, in the case of gold, you have a totally, entirely healthy looking pattern right here, okay? You're coming down to a 20-year trend. You haven't broken it. I don't see what the problem is. It looks fine to me. If we come and look at it on the weekly chart, all right, we're kissing it. All right, we're saying hello, and we've got a divergence there on the weekly time frame. That doesn't mean it can't go lower, but it's oversold. Okay, and when you look around and see everything that's going on, you look at the DXY, how it's getting a little top heavy, wants to roll over. You see how gold's resting on support. All right, and it wants to get a bounce. I feel like everything's in play, and I feel like a lot of people are getting scared in gold and silver right now when they ought to be, being calm, cool, and collected and sticking to the strategy. And so the strategy is, look, in the gold and silver space, you just want to be accumulating slowly, buying in tranches. Down days like this are great opportunities to add to your portfolio, okay? But save some cash, because you never know. It's always possible that you could get a broad market sell-off and things sell down together. So you want to have some dry powder for a scenario like that, okay? But just understand and appreciate that if that happens, that, it's probably going to reverse rather quickly, all right? Because whatever causes this thing, is likely to going to be bad news, and bad news is about to be good news for the metals. Okay, and if you have the Fed meeting here 7 days away. Okay, that's when we get the rate hikes. What if they only raise 50 points? Nobody's even talking about that as a possibility. What if they only raise 50 points? I mean, consider. I mean, you might see markets broadly rally on the news until they realize what it actually means. I mean, this would actually be bad news. It's telling you that something is broken, right? They've taken their foot off of the gas, and it would be for a reason. People aren't appreciating this, okay? So you just always have to consider all these things as a possibility, because when the charts are setting up this way with this much confluence of the DXY being high, interest rates being high, gold, silver being low, okay, and you're seeing reverse signals, right? Overbought signals, all these things in confluence to each other, and these things trade counter opposed to each other, you have to appreciate that there's likely news on the way. So what is that news going to be? Well, 7 days away, we hear something from the Fed. Whatever it is, something is coming. I expect a catalyst in the near term. If we take a quick peek at the broad markets, we'll just take a look at the S&P. We're resting on the short-term support. Doesn't look good. Again, your next target's going to be this 200 on the weekly. You have a confluence there with a kind of a double bottom. And even if you look on the daily, excuse me, let me go to the monthly. Okay, so on the monthly, there's the 50 right there at about 36.22 in the same place. It's in the same place. You have a three-way support there. I would entirely expect some kind of a test here, some kind of it's a perfect place for a bounce. All right, put it that way. But if and when you break this level around 3,600, that's when you're going to put into motion the secular bear. And once the secular bear starts, you got to appreciate that this is historically when gold and silver really start their runs to the upside, okay? And the metals have a tendency to sniff this out a little bit in advance, right? And this is part of why I'm saying accumulate now, because you can potentially get in here at or very close to the bottom ahead of the market, anticipating what comes next, right? Because that's how you beat markets. You got to be ahead of the market. You got to be forward looking. And so when you find this kind of confluence in the charts, it helps you do that. And so I would just encourage you to appreciate this as a possibility. All right. So with that being said, let's start rotating into the equities. We'll hit it over to uranium. All right, in uranium, we'll start with the Sprott ETF, the Physical Uranium Trust. Now, I've been warning about this one too for a bit. I showed you all of the divergences. I showed you all of the weakness in the uranium sector. I've been warning people not to chase this. I told you that this was going to roll over, and it's doing so. You got to appreciate something too here. Uranium really shows its hand. I mean, if you want to get into technical analysis, I mean, uranium's a pretty good place because it's always sharing its hand, right? It's like it's always telling you what it wants to do, and then it does it. And there are very few surprises. I think these Japanese restarts are about the only thing that surprised us in the last 6 months on this whole thing. Okay, and so when it shows weakness like this, you should take it seriously. If you just skip through, we're going to go through. Here's URA. Okay, so it's resting on the 200. You know, that's some short-term support. You know, the moving average is still pointing up. Fine. But it's still not a place to buy, at least not yet, okay? Because you got to let this play out and develop and see what happens next, okay? So this is not an opportunity to buy on weakness like I think it is in gold and silver. I think if the broad markets roll over, uranium will suffer more downside than the metals would. And they're not necessarily poised to rebound for the same reasons that gold and silver might. So it's for this reason that I have to stand by my call in uranium to just hold tight on adding to it right now. But absolutely, if you can get some major tests, maybe we come down here and retest this neckline all over again on a longer term time frame, right? We kind of tested it here, but now let's come back and test it one more time. And then let's see what the RSI looks like. Let's see if there's confluence throughout the sector. And that could give us another opportunity to buy, okay? And let's say that were to happen. That's another 6% down. That's not too far, right? Just hang tight and be patient, and let's see what it looks like when it gets there. There's no reason to FOMO, never FOMO. URNM, it lost this major level right here. For those of you who are new, we've been talking about this pivot point for months. All right. We called the whole double bottom pattern, right? We called the sell-off, and we knew that we would get this because we saw the confluence in the broad market. So we knew the broad market was about to roll over right about this time. Okay. And so we were encouraging you to rotate your positions, maybe rearrange your portfolio in anticipation of the sell-off coming back down to the trend line, which gave us another opportunity to accumulate. And that's all worked out fine and well. Well, you could get something like this again. Okay. So just hang tight. Again, in the uranium space, you're you're not really pushing any buttons, okay? Unless you want to trim and take some profits. If you're up big, I still encourage that. I mean, you don't actually make any money until you hit that sell button, right? And so, you know, sometimes the moon is closer than people think, but I will tell you this, Cameco is the sector leader, and it gives us a good indication of future price direction, okay? And at that same pivotal moment, we have this trend line here of about 28.20, okay? And so that's what you're looking for in Cameco. You lose 28.20, it kind of be the same thing as losing $20 back here, okay? You're going to lose a major area of support, and you're going to fall. You'll fall no less likely than this 50 here. And so, you know, again, that's not that far away, but you got to understand that's the daily time frame. You might come and touch it on the weekly. Okay, so that might end up being your next buying opportunity in the future. You know, and that's another 17, maybe 20% down if we hit the trend again. Just, you have to appreciate all situations and all environments, and the broad markets don't look good. All right, so keep it all in mind. Again, I'm just trying to reiterate the reasoning behind doing all of this. Okay, long-term, very bullish on uranium. Check it out. It looks great. The trend is your friend. The trend is up. It's in a nice bull run here. So just hang tight. All right. If you're in and you're in green, you can hold. If you want to hold for the long term and that's your strategy, fine. You're just not buying here. Okay. I want to make that very clear. Again, I have been warning of weakness in these names like energy fuels for a long time. I told you not to chase it. Right. And we had some massive upper wicks on the breakout. That was an ugly sign. We have collapsed all the way back down. If you look at it on the daily time frame, right, we have retraced more than half of the move, or about half of the move starting here on the Japanese restart day. Okay. And so if you chase that move, if you FOMO that move, and we said not to since the beginning, I mean, here you are coming all the way back down. And this is why good technicals are so powerful, because they give you these kinds of insights to sniff this stuff out and make good decisions with your money and your investments. Okay. But there are still some outperformers. Again, Cameco is a great performer. Global's a great performer. So while a lot of these other equities are continuing to lose major levels of support, names like Cameco, names like Global, they're still hanging tight. Okay, so that's a really good sign. I think it's something to pay attention to in the future. If you're looking for what companies you want to buy coming up next in the future, then you might really want to consider the relative strength that a lot of these equities like this are showing. Okay, because if you come up with an opportunity to buy on a big sell-off, you'll want to take advantage of the names that are going to outperform the sector, right? It just makes sense, right? I mean, these are producers. They have, or they're near-term producers with cash flow or near-term cash flow. These companies are less speculative, okay? Like a lot of these equities guys, you know, they might have assets and they might have potential, but a lot of them still need money for funding, right? They still have to build infrastructure. They're a long ways out, years down the road. And so you really got to kind of consider where you are in your portfolio and what kind of investments you want to make. Because if you want something more guaranteed in this macro environment that we're coming into, then you probably want something with cash flow, okay? Not something that's in debt or will need more debt just to get the project online, as interest rates are making debt even more expensive than ever, all right? Or certainly in a long time. So consider all these kinds of things as you make your investment decisions on how you want to play this. Now, if we come to a couple of names that I've been talking about lately, some really big names with a lot of potential, names like Silex, okay? This is an enrichment play, and they've had an amazing run up to this point. And we tried to point out that this was showing a lot of weakness too. In the daily time frame, it was very funky because it was showing you it still had room to do something crazy to the upside, and we pointed this out. But on the weekly time frame, it didn't look too good, right? It looks like it wanted to roll over. Well, it's resting firmly on this support at 338 for now. But I'm telling you, as long as you are this far away, like you are from your 50 on the weekly, look, man, that's 900 miles away. I mean, that's a long way to fall. And I guarantee you, whether it's a week or a month, it's going to touch this. Okay. It's going to touch this moving average. It's a long way down. So again, this is a long-term strong buy. If you're the type of person to hold for years and you want to get in at a great price, this is exactly the kind of company you're looking for that kind of investment opportunity. But this, again, is not the time to buy it. Okay. If anything, hopefully you're holding green and you really want to consider how much profit you've taken. Have you taken any? If not, then you want to consider doing that, okay? Because the downside risk is real. All right. And then the upside risk is still quite high over the long term. So what do you have to lose, right? So just consider things like that. I just kind of encourage people to make sure they're thinking clearly on these types of things in their investments to make the right decisions and not get stuck, okay? Because you got to have perspective. When the macro's rolling over like this, a lot of things could break and a lot of things could happen. Right. And this is why I'm more net bullish on gold and silver right now, because it's coming into more of a opportunistic time in anticipation of what's next. All right. These things are already oversold. These things are overbought. Right. Uranium has kind of got overbought where gold and silver are oversold. And if they continue to sell off more, well, then they're just even more oversold. It's even that much more of a great value. Right. And so this is why I've been rotating out of uranium. I've gone public. I have made several sales, right? I sold out of Fission. I sold out of Global. And I sold out of Dennison and Encore, okay? And I still have a pretty large weighting of core positions in uranium. But, you know, again, I'm building up cash. I'm taking profits and I'm preparing for what's next. And a lot of this money is going to rotate into the gold and silver space. So I just kind of want to give you that on uranium. You know, there's no point in going down every single equity because the weakness is rather consistent in confluence. You know, it's pretty much across the board. Look, UEC was once one of the strongest names. So from this moment down, you could rely on UEC for guidance in the sector. All right. It was one of the best names to track. And it was one of the reasons that we had some good success here in trading uranium. Okay. With the confluence it had with NXE, now a bust, and Cameco, among a couple of others. Well, again, you struggled with this neckline. And I tried to point this out since it started. And now we have fallen through, and you have fallen quite far. If you bought at the top there, I mean, you're down 20%. That's no good, right? And so again, I don't think that you can say that this is a buying opportunity yet. There are no buy signals, so just be patient and hang tight. More opportunities will come. Don't FOMO anything. All right, in the case of gold and silver, we'll start with AG. AG still looks fine. It's hanging up around the trend line. It could lose it. All right, remember, where was it? Back here. When the gold and silver equities were right here, we gave ourselves two options that we could see playing out. Number one was this inverse head and shoulders, which has turned out so far to be in play, technically still. Option number two was to come down and put in a retest of this low, okay? And those were our two base cases of what could happen. So if this inverse head and shoulders pattern doesn't play out here, I think your base case next of what you can expect is to come down here around 634 in the case of something like AG and retest this low and see how it holds. I think that this would be a strong buy zone, right? So if you want to make a tranche entry, like I've been recommending, this is an ideal place to do it. Again, you can probably find confluence of a retest of that low if pause comes down to around $14 and something like that, right? You could look at something like Agnico Eagle coming down to this trend line about 38 bucks, okay? So these are near-term expectations that you should have for easy downside and a great place to accumulate, okay? Because like I said, gold and silver look way better for buying than uranium does, right? I mean, you're getting an extraordinary opportunity here in the gold and silver space. And I think this is something that I preach all the time on this channel, is that when you spend all the time that we do sniffing out stuff in the charts like we do, then when the moment comes, you have to have the confidence to strike. Otherwise, you're wasting your time, right? I mean, these are the opportunities that the market gives you on rare occasion that, you know, if you don't strike on it, then, you know, what are you doing, right? What are you doing? It's not to say, remember, I'll restate this again, a crazy market event could happen. It could happen. I don't know that. That's unpredictable, right? You can expect it. You can anticipate it, right? Which we are, which is why we're going to save a good chunk of cash here in the event that that happens. But again, you get a start sell-off like this, and it will be for good reason, and it will double as a good reason to own gold and silver. All right. So I think you can really feel safe here with these historical analogs that we're getting across the space, and it's name by name by name. All right. And so it's just like I told you, when we came down to retest these levels, we will be just as oversold, if not more oversold than we were the first time. All right. And this is playing out. So I would just encourage you to hang tight, have this strategy in mind. I think it's going to play out well. Okay. This is going to age well. I am confident in that. I'm confident enough to go on the record and say it. And look, just be patient. I see a lot of fear out there right now around gold and silver. I see people freaking out, but I can tell you that it's all going the way it's supposed to go. There's no shock. There's no shock in gold and silver today. There's nothing wrong. In fact, let's go to the gold price again, right? So look, what's wrong with this? There's nothing wrong with this. This is a trend line, right? This is a massive 20-year trend line. What do you do with trend lines? You test them. You come down, you kiss them, and you leave. It's like, that's what you're supposed to do. And then we're coming down and getting a little kiss. So what's the problem? I don't see any problems. All right. Now, if you break this, you can look and see, look, man, guys, when you appreciate the macro situation, and this is why you have to appreciate macro when you do technical analysis, okay? I think any kind of breakdown here is going to be a peekaboo, which is what I call it when you break down, all right, and then you come right back up and come back into trend. You saw uranium equities doing this when they tried to get above their necklines, couldn't do it, and they failed, and they left these long upper wicks, right? I would just fully anticipate something like that happening in gold and gold equities even if we got a breakdown, okay? And it's going to snap right back. The macro's too strong. The Fed's cornered. I mean, things are breaking down on a global level. Things that, these dumb politicians thought that they controlled are getting out of their hands. I mean, everything is just going wrong. And so this is exactly the time you want to buy insurance, right? You want to buy it before your house is on fire, right? Like Mike Maloney says, and that's exactly right. That's true. And so we are in this time, right? We can see the fire coming. So now's the time to accumulate the insurance. And so have perspective. Don't freak out. Just understand what's happening, understand what could happen, and then also understand what it will likely mean. And keep this thing in perspective, okay, so that you can be calm, cool, and collected when the moment comes, as not to abandon your positions on the bottom, right? Or buy or spend all your cash now, right? Don't do either of these things. Accumulate in tranches. The lower you go, the little bit more you can add. And always have some cash on standby in case you sell off sharply, all right? And so we can go down equity by equity by equity, and there's really no reason because they are all the same, because they're all trading in confluence, right? I mean, we've covered this so much. I mean, these equities all look the same for the most part, right? Especially these names like Hecla and Agnico Eagle and all these guys. I mean, they're all putting in a lot of the same patterns. They're all resting at the same critical levels of support. I mean, it's all the same. And this is what's so good about it, is because you have this confluence. Okay. And that's what makes it powerful. You don't have to go equity by equity. You can look at, for example, some of the big names. All right. And this is what we did in the last sell-off. We use the big names in the case of gold and silver, like Agnico Eagle. We use First Majestic, we use the ETFs, and we found the confluence when they were hitting these major levels of support. Okay. At the same time, the same equivalences did in, say, uranium, right? Cameco and UEC and the rest. And I think you can expect the same thing now. So whatever equity it is you want to buy, just keep an eye out on, for example, Agnico Eagle, $38. All right. That'll be a pretty good spot to look for to see if it holds. All right. And that's you can apply that to just about everything. All right. The GDX. All right. I've got this downside of about $21. All right. You might tap. Well, we already kind of did tap 23. You might retest that. It's just a lot of chop in here. So that's all going to be kind of random. But on the absolute low end, I say $21 is a pretty good spot. So keep an eye out for GDX at $21. Keep an eye out for Agnico Eagle at 38. And these will be powerful opportunities for you to accumulate strongly if the market affords you the chance. So when you get this kind of opportunity, again, you got to strike with confidence.